And what's the ownership of Howard Hughes? Part of it's in...
So it's 47% held by myself, other Pershing Square affiliates, and the balance is the public. And the stock today is going through a transition where what were pure play real estate investors are largely selling, and they're being replaced by investors who I would say are more open to the idea of what we're planning to do.
And another thing you're interested in is Fannie and Freddie.
Yes.
Fannie Mae and
We've
Freddie
been a
Mac.
long-term shareholder. Yeah.
And they went, they did go bust. They were bailed out back in the crisis of 08, 09.
Yes, we were actually short going into the crisis, Fannie and Freddie.
Good for you.
In 2012, we bought it back.
Is the government going to give it up? They get, what, $20 billion a year they suck out of them?
The government's not going to give it up. The good news, we're going through, a time with very large government deficits, and it's not clear how we're going to work our way out of $36 trillion of debt. And I think Scott Bessent, to his credit, has said, look, we got to focus not just on our expense side, the liability side, we got to focus on the asset side. And the U.S. government today is the 80% shareholder and a preferred stockholder of Fannie Mae and Freddie Mac. And these are two remarkable businesses.
The numbers they throw around are huge. $300 billion.
The government's interest in Fannie and Freddie is worth approaching $300 billion. The path to the government realizing the $300 billion is today these entities are in conservatorship. And conservatorship is what is meant to be a temporary place where the government puts a financial institution that gets into trouble until it can recapitalize and emerge.
And by the way, this temporary conservatorship is what, a generation old now?
Yeah, 16 years in or something like this. And Trump has been talking about, first starting with Secretary Mnuchin in his first term, and now I think they're going to finish the job, is the companies will come out of conservatorship, and they need to come out in a way that, of course, protects the 30-year mortgage and make sure that the cost of mortgages doesn't go up. But it can emerge in a...
How do you prevent that? Because one of the raps against privatizing or changing the status quo is that mortgage rates are going to go up, the guarantee fees have to go up.
Not true.
How do you answer that?
Yeah, so Fannie Mae and Freddie Mac today are vastly better capitalized than they were for the first 60 years of their existence. They were only required to hold 0.45% equity against their guarantees. And by the way, 0.45% would have been enough during the financial crisis had they not gotten into subprime. But it was still a thin level of capital. When they emerge from conservatorship, assuming they do, they'll emerge with at least 2.5% of equity relative to their guarantees. And if you think about their business, it's not a bank. People are confused by this. Fannie Freddie's business is they buy conforming mortgages, mortgages that meet a very safe standard, first mortgages on middle-class homes from credit-worthy borrowers that are not that likely to default, and if they default, there's unlikely to be small losses. They buy those mortgages, they package them up in these trusts, and they sell securities backed by them, and they guarantee the securities. But the probability of default is very low on this kind of highly diversified, very safe collection of mortgages. And they collect a fee, a guarantee fee for doing this. So the protections they have against their inability to meet the guarantee is, one, they start with a huge amount of capital. They're going to merge with a couple $100 billion of equity.
If they went private, would they still keep their line of credit with the Treasury?
Yeah.
Is what? How many hundreds of billions?
So they've got about $7 trillion of guarantees. And they have enormous cash flow that comes in from the 65 basis points per annum they charge on those guarantees. So if we went through another financial crisis, first they have to blow through all their equity. Then they have the benefit of almost $400 billion of the ability to call upon senior preferred stock from the government. And they also have this enormous earning power that continues even when they go through a challenging period. So there's a belt, there's suspenders, there's another belt, there's suspenders, there's a huge amount of equity. And then beyond that, because of the systemically important nature of Fannie and Freddie, they do have an implied government backstop. And so like JP Morgan, if JP Morgan were to fail, the government will come in some form. But there's a huge amount, unlike in the past, where there's a relatively small amount of investor money at risk before the government stepped in. Here, there's massive amounts of private sector capital, and there'll be more if they emerge. So I think, and actually, these have been wards of the state for 16 years. They've done a very good job, but they can be run much more effectively as true profitable enterprises. They've been limited in what they can pay their management teams because of the Congress.
And with that So do you think politically you can overcome the obstacles? Because the critics say, oh, it's going to wreck the mortgage market. You're going to have 9% mortgages with a guarantee fee and all of that. I mean, the demagoguery's already started.
Yeah. Look, I would say, one, the rating agencies here have already come out and said that privatization would not lead to a downgrade. That's a pretty good indicator. And investors in fixed income securities are very sophisticated. These are among the safest. You could argue that Fannie Mae Freddie Mac securitizations are safer than even US government guarantees because it's secured, and on top of it you get the guarantee, whereas we're of course unsecured when we face the US government on a US Treasury.